The market is very focused on Germany's plans for a fiscal stimulus, but we think also the US's plans for fiscal consolidation are equally as important.
Welcome to the long and short of the week ahead, a production of Eurizon SLJ Capital that takes a look at the macroeconomic themes of the week ahead and has been recorded for professional investors. My name is Matt Jones, Head of Distribution for Eurizon SLJ Capital, and I'm joined today by Neil Staines, Senior Portfolio Manager. Welcome back, Neil. It's great to have you here with us.
Thanks very much, Matt. It's great to be here.
Tariff rhetoric and fiscal plans have dominated both price action and sentiment this week, adding to another very complex week for financial markets. But leaving that to one side at the moment, what are we looking for in global data next week?
Yeah, great question, Matt. It's very complex indeed. Tariff and trade and fiscal policy, at least on a relative basis, and what we see as convergence of fiscal policy have definitely been very dominant in terms of the FX flows we've seen. We still see fiscal contraction or conservatism as more likely than consensus expansion expectations in the US, in the order of 3% US deficit, not the 7% that market expectations still centre around. And that has material FX implications on relative fiscal and, by extension, through relative monetary differentials there, most notably in the FX space, as we say. So the market is very focused on Germany's plans for a fiscal stimulus, but we think also the US's plans for fiscal consolidation are equally as important. Now, taking a step aside from the uncertainties of tariff and fiscal policies at the moment, next week's global data will be watched very closely in the hope that we get more clarity. Now, on Monday, we get China's suite of data for February. That's house prices, industrial production, retail sales, fixed asset investment and unemployment, and markets will be very clearly hoping to see some signs of stabilisation in demand. There's been a very important emphasis on the global economic recovery. On Tuesday, we get the German ZEW, and after the massive stimulus announcements, although we do still need to see those passing through the Bundestag and Bundesrat by the 26th of March, but any jump in sentiment in the ZEW in the forward expectations component will be well noted. On Thursday, we get the Riksbank, and they're expected to leave rates unchanged at 2.25%, having come down from 4%, with inflation marginally rebounding in February, but still well below target. We also get the Swiss National Bank. They are expected to cut 25 basis points to 0.25, with headline CPI still at just 0.3. The risks of negative rates are most acute in Switzerland, and commentary around that will be very closely watched in that regard. And then finally in Japan, on Wednesday we get the Bank of Japan meeting. We're expecting unchanged, but inflation on Friday still well above target keeps the bias remaining to the top side. Markets still focused on July and then January 26 for further rate hikes out of the Bank of Japan. So all in all, an interesting week for global markets.
Now, after a relatively quiet couple of weeks, the UK is back on the radar next week. So how are we thinking about the UK macro at the moment?
Yeah, thanks, Matt. It's been relatively quiet indeed, certainly on the political front. We've had reports that Starmer is pushing for a UK-US trade deal to avoid the risk of tariffs for the UK. And of course, there's much speculation about the potential announcements at the fiscal event in a couple of weeks' time, both worthy of note. But the focus next week comes back to the Bank of England. We had two dissents in favour of a 50 basis point cut at the February meeting, and that certainly raised some eyebrows. But rhetoric from Sir Dave Ramsden that recent wage data has altered his view of the risks to prices has led to a more balanced narrative around expectations for the Bank of England in the near term. No press conference or updated projections means limited new information, but the statement will be forensically examined for forward-pointing clues nonetheless. Market pricing is almost zero probability of a cut at next week's meeting, but we do get the employment report on the morning of the meeting and public sector borrowing data on Friday, with housing data on Monday, so they could shape the narrative going into the meeting. Overall, the UK is back in focus, but not likely back in action just yet, at least from a monetary perspective.
In contrast, and never out of the action, the US has been at the heart of geopolitical and geostrategic developments. And next week, the US also dominates the macro with the FOMC meeting. So how are we thinking about the Fed at the moment?
Yeah, absolutely. Recent weeks have seen a very complex macro backdrop and heightened tariff and trade uncertainties, and they have seen or facilitated material equity correction, and we touch on that a bit further in this week's blog. Now, expectations for action at next week's FOMC meeting is very low, with just 1 basis point priced. In fact, a quarter point cut is still not priced in the curve until the June meeting. But what is likely to be the main focus is the updated economic projections for growth and inflation, and by extension, the dots. Essentially, how the Fed are adjusting their expectations of the economic trajectory as a function of tariffs and the current geopolitical uncertainties, and now also how they may be adjusting those in relation to the recent equity decline. The press conference and the statement will both be an hour earlier this week, as the UK clocks are yet to be altered, but will be very keenly watched nonetheless. Retail sales on Monday for February will be another key barometer after the disappointment in January, so again another key gauge of the pace at which the US economy is slowing. But the FOMC and Powell will likely dominate macro sentiment next week.
Fantastic. Thank you, Neil. Another action-packed week ahead. And in the meantime, I think we might have similar for the weekend.
Absolutely. Plenty of complexity and uncertainty across the weekend with any hope, but certainly a lot of intent focus. In football, there's almost a full Premiership schedule, with West Ham United versus Everton at the bottom, City, Brighton and Arsenal, Chelsea, the pick of the bunch at the top. Also, we have the League Cup final, the first trophy of the season, Liverpool versus Newcastle. Liverpool hoping to get over their penalty defeat in the Champions League during the week. Formula One is back with the Australian Grand Prix, Hamilton in a Ferrari, Russell in the lead car in the Mercedes, and of course that Norris versus Verstappen rivalry. Hugely looking forward to lights out on Sunday morning. But for me, it's going to be all about the rugby. The culmination of the Six Nations and the final weekend, Italy versus Ireland, Wales versus England and France versus Scotland. Ireland, England and France all in the race on Saturday. France in pole position.
Wonderful. That does sound like a brilliant weekend of sport ahead. Thank you for joining us and for outlining your thoughts on the week ahead. I look forward to catching up with you next time.
Thanks very much, Matt. It's been a pleasure.
Thank you for joining us for the long and short of the week ahead. Further insights are available on our website, Eurizon SLJ Capital.com. We look forward to you joining us again next week for more insights into macroeconomic events and the long and short of the week ahead. Information, data and views were accurate as at the time of recording. The views expressed by presenters are their own and do not necessarily reflect those of Eurizon SLJ Capital, Eurizon Capital, or the Intesa Sanpaolo Group. The information and opinions contained in this recording are for information purposes only and do not purport to be full or complete. The recording is directed at professional investors only and is not intended for and should not be relied upon by other investors. The information in this recording does not constitute an offer to buy, sell, or the solicitation of any offer to buy or sell securities or any derivatives.